Hey guys, good morning. It is the 22nd of September, Thursday. FOMC is out of the way. That happened yesterday. As expected, we got a 75 basis point rate hike in the Fed funds rate. What kind of shocked the market a little bit was the dot plot showed a slightly higher peak rate of 4.6 versus the previous expected 4.5. And it also showed rates holding through 2023, which kind of got the market unsettled right from the get-go. Let's look at this real quick because this was just an incredibly fun thing to watch. I did have a put position, so I was had to almost change out my shorts yesterday. Huge swings in the value of those puts, and it caught me off guard because I just did not expect it. So right at 2 o'clock when the release came, once again we got this data here. Massive move to the downside. My target was going to be this 379 area, which is a previous gap on the chart. Sorry, this chart is super nasty, dirty. Where are we at here? This gap here, that was the top of this was going to be my target, and we I thought with that big move down we were going to get there. Where are we at? Oh, here we are. All right. Jeez, here we go. So this big move here, let's put the 5-minute on. It was about $1.50 away from touching the top of this gap. And then the market just started rallying up, and I was like, what in the heck? For you folks on Omni, I was posting like in kind of in disbelief, like what is going on? Like, the Fed just shocked the market, like it came in hotter than expected, and now we're moving up. And actually, I think at one point we were almost 1% up for the day. And then what really turned the markets lower, excuse me, during the Q&A session, right from the get-go, Jerome Powell was like, hey, I want to reiterate what I said at Jackson Hole. And then that's about the time. So like he started talking at 14:30. So he was talking, and then he referenced pain and below trend growth. And then, the market's like, hey, what are we doing here? And started moving lower. Super fun day to watch. I exited. So the gap, top and bottom, there's a purple line here, so that line looks funny. I took profits about right here. No, right here. Just before 1600, about 1555, because I didn't know. I cut one quarter of my position on those puts, just in case we snap back this morning. So I may or may not look to add or trim more. And definitely if we go down, I'm going to trim more, but we'll see how that plays out. Let's take a look at oil real quick. I'm going to make this video as short as possible instead of rambling on. Once again, still in a trading range, holding this longer term trend line. I'm waiting to see which way this thing breaks up or down, and then trade, oil stocks accordingly. Yields ripped up higher. Dixie, let's look at the Dixie. Came up and almost touched the top of this channel before retracing, but it is holding above this previous peak here at 110.79. 2 year, it ripped higher, and it ripped over this 3.919 level, came back, retested, and then made a new high yesterday. Actually, that's this morning. So it's actually, it did get above yesterday's peak spike around 1400 when the FOMC results came out. 10 year is still holding. It's holding this previous peak, so consolidation. We'll see where that goes, but the higher this goes, the more pressure is going to be on equity markets. Consider one thing now. These I've heard a lot of analysts talking about this. Is excuse me. In the past, you know, these rates were like super low. Sorry. So, you know, these 1 and 2 year bonds, they're yielding 4% right now, and that's a risk-free 4%. So we might see a flow into the bond market from the equities market. So that's gonna take some liquidity away, possibly. So just be aware of that. And you know, in the past, you couldn't make money in the bond market. The rates were just too low. Well, we talked about that. Oh, let's look at the gaps on SPY. So the gaps that remain on SPY, like I said, this thing almost filled yesterday. So there's a small gap here. The next gap I'm looking at occurred right off the lows here, and that was around the 368 range. So just be aware that's there. Something to note, I put these boxes, these green boxes, you know, reversion to the mean theory. I'm looking at this 10-period moving average, which is the daily chart, so it's 10-day moving average, simple moving average. And the distance, I drew these boxes here to demonstrate the distance from the 10 SMA. So just be aware. I mean, the market can go up and down. I don't know what the market's going to do. The chart does not look bullish to me, just my opinion. Like I said, I'm not a financial advisor, but the farther away from these moving average price goes, the more likely it's going to maybe trade sideways or come back for a little relief rally. So just be aware. Nothing goes straight up, nothing goes straight down. So once price starts getting away from these moving averages, you know, it starts opening my eyes. You guys see on my trading videos, when I'm actually in the trade, I'm paying attention to the distance between these moving average. And once again, that's the mean reversion theory. You know, price is going to want to revert back to the mean, which is the moving averages. Let's see real quick. Ethereum, just mention this really quick. Ethereum tested this level 1238.93 yesterday, and it bounced. It is still under its longer term uptrend line. So we'll see where this goes. Might come back and retest it again. Might set a new recent low. Who knows? Let's look at Google. Google has entered the gap that was created back in February of 21, so a year and a half ago. This gap was created. Let's turn the 24-hour on so you can see it. It is currently in the gap right now. So this may be a decent trade here. Tesla. It took it a little bit hard yesterday, but this is still for now, this is a bearish pattern. Ascending triangle pattern here. You know, patterns are, you know, nothing's 100%. I think ascending triangle is like 66%. It's going to break to the upside, but I mean that's not an overwhelming odds. This thing, if the market tanks out, this thing could easily break this support here and continue down, or it could rip up higher. Who knows? Tesla's Tesla. Just play the chart is what I'm going to do. You know, you guys responsible for your own trades. I have alerts set on both of these lines, so just saying. CRM Salesforce is below these previous levels of interest here. Still just watching this. Microsoft, it also broke below these lows, so this is something I'm definitely watching, as well as AMD. It's getting close to this previous low here, so I'm definitely watching that as well. For, you know, these lows like this, it could easily bounce and rip higher, or it could break and go lower. So, you know, as always, play what the market gives you and use a stop. You know, everybody's wrong sometimes, so that's why stops are important. And you know, we're using past performance to try to predict future performance. So there's nothing's 100%. I believe that's it. That's all I have for today. This video is long anyway. Once again, hit me up on Omni, and just reiterate, I am not a financial advisor, just my opinions on these charts here. And happy trading. If you guys have questions, hit me up on Omni. Have a good day.